Good morning, everybody. This is Dennis Woburn with the Active Trend Traders, and we're going to go into the How to Make Money Trading Stocks webinar on this exciting, just absolutely exciting Friday, September 25th, 2015. Joining me from Zurich is Michael Bischoff. Hi, Michael.
Hello, Dennis.
And glad you're with us today. I saw your slide and I'm going, wow, that's a pretty good topic to be chatting about. And I know that several people are also looking forward to when you're going to do your presentation on the robo portfolios and all that kind of stuff, and asking the question about does it make sense to try to invest like Warren Buffett? And so let's get going. Want to remind everybody that all the materials that we do present here are for training purposes only. A trader should always paper trade any new method prior to the risk of their own personal capital. This week in the market has been really exciting. I got several emails that came in for those who are members of the early warning system saying, well, do we have a signal to get long the market? And which I replied to them, no, we don't. And that is simply because, one, we don't, all the stars aren't aligned yet. No, we've got some preliminary things that saying, yeah, maybe, but not the hard signal that we're looking for. So be patient. This is definitely a patient market. Every Wednesday evening for Active Trend Traders members, we do a training webinar. This past week, we focused on the secrets that you can find out from understanding the pre-market, the futures market, if you will, and what you can draw away from that. And it's a really good webinar. If you have not seen it yet, check out that training. It has been posted to the website. This week, I sat down with Mike Traeger over the phone, and he and I went hammering back through a lot of our trades so far this year and go, what's going on? You know, because it's been a challenging year. And while, yes, we are beating the index, we've had to do it through some other, strategies and just the straight buy and hold type strategy or the swing trading strategy. And one of the things that came out just glaringly is a couple of filters had snuck into the way we were basically evaluating the stocks, and they got us away from the simplicity of just utilizing that 8-period moving average. And so this next week we're going to talk about refocusing for the fourth quarter, because I know my portfolio isn't up as much as I would like it to be up going into the fourth quarter, and we're going to subtitle it Back to the 8, because we went back and looked at a lot of those stocks that we were trading, and if those filters hadn't snuck in, there were some just really awesome trades to be gained off the 8-day moving average or the 8-week or the 8 period on the intraday charts. And so I came away kind of like as I was writing this all down in my trading journal, and I came away with kind of a statement that, sometimes when we try to finesse our trades, finesse can lead to confusion, and complicating and confusion leads to complications rather than simplifications. And, at Active Trend Trader, we're all about trying to simplify things. And so, like I said, and, you and your trading, it's always a great idea after, a quarter or after a month, or, semi-annually, go back and just say, okay, what took place in my trades that not only what could have been done better, but secondly, how could I have, did I violate my rules? Has something snuck in that is influencing me? Have I, traded some emotional things? Or sometimes, as I said, some good ideas can pop in, and we'll say, hey, well, I'm just going to finesse this trade, where if, and it can take us out of our primary main focus of how to trade a system. So, Michael, I don't know, I don't know if you journal your trades and how often you go back and review them, but I know that I find it very helpful to go back and relook at my trades to see what could have been done better.
Definitely.
Cool.
Yes.
So this morning, Janet spoke, or maybe it was yesterday, and she apparently was. When was it, Michael? It was a couple of days ago. Or was she talking about when she did the big news conference where she said that she got parched or something? She needed water or something like
Yeah,
that.
I think yesterday.
And well, last week we saw that the market, they bought the rumor and then sold the news after Thursday in the Fed meeting. Well, this week, it's exciting time. The Pope's in America. And then Janet spoke again this morning, and the market reacted. The futures on the markets were really up. However, what did we get this morning? We got basically a pop, and what's right now, as at this point in the trading day, looking like it's going to be a pop and drop, which is more in line with a negative tone to the market rather than people just coming rushing in and buying and launching the market onto a new uptrend. And so what I was looking at is that the S&P was down 5 out of the last 6 days as of yesterday. And so it would make sense that you would want to do some resting because just as when a stock or an index goes up, it will come to a point where it needs to rest to consolidate its gains, and then typically do a little retest and then a bounce back, and then a further bounce from there. Well, the same thing happens when a stock is in a downtrend. It consolidates its losses, and a lot of the sellers look for those little bounces to get back out of the market. And we could have also been seeing some short covering for people who shorted the market after the Fed did its meeting last week. The NASDAQ 100 has been holding up much stronger than the other two indices, other two tracking indices. It's holding up, but it too has not come out and just launched off into a new uptrend. So it'll be interesting to see what goes on there. And the Russell, that and the S&P are the two weakest. And so I'm sitting there looking at the Russell, going, is this the storm? Is this the calm before the storm of a further drop? And of course, the charts will tell us what's going on. The outside influence, we are getting ready to go into a new earnings season here in a couple of weeks. But the market right now is still reacting to sound bites. And the path of least resistance as of right now still appears to be down. At least that's what I'm seeing. And that's the honest truth as told by Janet here. So, Michael, are you kind of seeing the same kind of thing over there in Europe that you'd mentioned you've had some severe breakdowns of trend lines on the DAX and some of the other indexes there in Europe, and also price action is resting below the moving averages. So, would you agree that potentially, and that it appears at least that right now the path of least resistance is down?
It's, I think, very difficult to say.
Okay.
What I have seen so far, that we had a first phase where kind of everybody was watching to China.
Right.
And now it's more that everybody's watching to the U.S. markets.
Okay. Because I know, like overnight, I know that during our overnight, and the European market just closed a few minutes ago, about 8:30 this morning here in California, and Europe had a pretty good rally today. And
yeah, but I think but
now I haven't looked.
Meaningless now.
Meaningless.
And then I mean, these car maker stocks. I don't know the exact percentage of the overall market, but especially from the German market, which is, I think, it's the biggest market in Europe.
Right.
If you take Volkswagen, then there were rumors about BMW that maybe they had also some issues.
Really?
Yeah. It was just a one-day story, but it's I think one day 8% the stock went down, and then it went up again 6% or so, and yeah.
And so, well, we got a question here, Michael, for you. Is basically, what's your opinion of the VW or Volkswagen debacle?
And the Volkswagen is really a debacle.
And yeah, I was telling my wife last night that I thought it was kind of creative what they did. They came out and made sure that their cars passed the EPA standards here in in the U.S., but then they apparently would remove the little piece of equipment off the car because it would destroy its actual performance. I don't know.
Yeah, I think it really they built in very smart software.
Yeah.
And if the steering wheel is not turned for 10 minutes and you're always going the same speed or the software checks this is a test.
Yeah.
Then the engine behaves differently.
It's so funny though because here in the U.S. at least. The used Volkswagen, some of the people who, let's see, the computer would detect when smog test started and reconfigure it to pass. Yeah. Well, that's, I was telling my wife, I go, that is really creative, to have, your car be able to do that, to get past the overreaching and over the heavy hand of the EPA, but I'm not going to go there because I'm not a big fan of the EPA, but that's another question. That's a discussion for another day. You have to admire the brazenness of VW. I agree, David. I have David Trujillo and David Burdies here talking about two Davids. And I do. But one of the things that has hit here, and I wonder if they're doing that in Europe, is the used Volkswagen. Some of the people who own used Volkswagen, they're really concerned because they've had their resale value drop by 15 or 20% in the last week.
Yeah.
So hey, who knows? It may be a good time. Hey, maybe Volkswagen will start doing some bargains going forward.
Yeah. I mean, I think it's very comparable to the BP thing. I mean, maybe the best is just wait.
Yeah.
Wait a little bit, and then if everything calms down, it could be really an attractive stock.
Yeah.
But you have to be careful. Volkswagen has a complicated shareholder structure.
Oh, okay. That's good to know.
Yeah.
And so, okay, let's see. Taking a look at the stocks above the 20-day moving average on the NYSE. And last week, we had made a nice little rally up. We saw that. That was Thursday of last week. That was Friday of last week. What has happened this week? Well, as we stated, we've had multiple days of significant downtrend. We got down to the 30 level and have done a little bit of a bounce. However, today, we get a gap up, and now it's proceeding to move on down. And one of the things on this particular chart we covered on Wednesday night, and I'll just address it really quickly here, is if you are interested in following these kind of stocks, go here to barchart.com and pull up one of these percentage of stocks on the NYSE, but go to the percentage of stocks on the NYSE that are above their 150 and or 200-day moving average. And what you'll see is that while we had this huge takeoff here, what appears that's stocks breaking back out above their 20-day moving average, on the chart of the stocks above their 200-day moving average, it's still down there about 30%. And so what that's telling us is that when you look at a chart, here's the 200-day, let's say, and here came the 20-day. Well, what was happening was you had such a great expanse between here. It was much easier for the stock, more stocks to get above their 20, because what are we in? We're in a daggum downtrend, and so it was just like I said. You look at that chart, and it's just a hiccup. So this is not surprising to have a large number of stocks get back above here, because in a downtrend, that 20-day moving average is a much lower bar. And so at this particular time, it is in a downtrend significantly. And so while we still use this as a timing indicator, this climb in this fall is just very reminiscent of what you get when you go into a bear market. So Michael, before we get into the charts and all that kind of stuff, I know you're going to talk today, and here's your chart. Inside professionals trade the big volatility in losers. I found that was a very interesting title. I'm going to switch the mouse over to you. So
well, I don't need a mouse. So
okay.
It's really, I can a little bit comment on that, and maybe we can also have a look at the chart. But what I see that some managers I follow that have really a good track record, they are now neutral or even bearish with their core portfolios, and play around more than usual with high volatility plays. So, for instance, Brazil is in such a bear market.
Now, excuse me, but is this the ticker for Brazil?
Yeah,
okay.
Yeah, exactly. It's such a bear market that you can still trade, or you can sell put options that are more than one standard deviation away from the current price, one month or so, 1 or 2 months, and so you can get a little cash, and I think they the target is that they can buy the puts back when they decrease the 50% or so.
Yeah, Roger, that is a really good strategy.
Or on worst case, you get the EV set on then at the 7 years low. Yeah.
Cool.
And also with GDXY, that's the junior gold miners, volatility is extremely high, it seems, but it's very hard to predict that it's in it's really now in an uptrend.
Okay.
And so here you can also get some nice little cash by covered calls with one or a half standard deviation.
Okay. And then what's this here?
That's gas, natural gas.
Right. That's
also in a terrible bear market.
Yeah. And if I'm not mistaken on this particular, this is not a per se, it's an ETF, but it's the other thing, where if you trade this in the U.S., guys, you have to do an extra filing with your income tax, just to let you know. Because
why this? What's so special about this?
It's oh gosh, somebody help me out here. Why it's so special? But yeah, UNG. I traded that several times in the past, and depending on the holding period, I would get these forms from the company that sponsors UNG, and then that would have to be filed with my income taxes, because it counts as a different kind of return, and they treat the losses with it just a little bit differently.
Okay.
Cool.
Or Twitter, I think Twitter has now given up, and I think that's not a wrong. I wouldn't jump in either, but I mean, if you understand how this option plays or strategies work, I think these are now good candidates for. Also, if you keep the size small, you can adjust the rates that you have a statistically probability of maybe 70%.
Yeah.
Then it's now a good time to have some, I call it almost free premium.
Yeah. And do you know if these ETFs, I would think that EWZ,
They are liquid.
they're very liquid, but
Yeah.
they also offer weekly
Yeah,
options, do they not?
yeah, they do.
Yeah, because I know that I have been trading weekly options for about 4 years now, and in times of volatility, I absolutely love them because I mean normally with a covered call, let's say, you expect to make what one to 1.5% selling premium on a covered call on the monthly options,
Yeah.
and with the when you get some volatility, you're making I've noticed that I can make somewhere between 1.5 to just selling the weekly premium against it, and that's comes out to somewhere between a 2 to 5% amount of cash flow on a monthly basis, and so the weeklies so much outperform the monthlies.
Yeah,
And
or I think just mathematically the better strategy is to go for 30 or 40 days,
okay,
but sell them as soon as they lost 50%
yeah,
of value. I think that's mathematically the best approach. And
well,
once again, weekly options help.
yeah. So okay, what's going on with this topic here?
Yeah, that's a nice one. That's on the agenda. Bottom line is a lot of financial media write nice articles, and they want you to believe, do value investing, and get rich or get the performance of Warren Buffett. And that's just a scam.
Oh,
A lot of people have done some research, and I think it's a good opportunity now to if I find a little time to to
yeah.
make a little slide out of it.
Okay, I look forward to that. And then robo-advisor we talked about a little bit last week, and I look forward to that one also.
Yeah,
Um,
I'm wondering what my demo portfolio is doing with this.
okay,
I haven't looked in for a while.
and so you have some of your funds capital tied up in a robo-advisor.
No. I just for curiosity, I jumped on the train and opened a virtual account
Ah,
there.
okay, gotcha. And so, okay, cool. Well, Michael, thank you so much. Yeah, uh, so let me ask you one quick question: if professional traders, institutional traders, are jumping into these bigger volatility type trades, what does that tell you about their market posture?
Well, I mean, per se, they are just. I thought, yeah, I would say it this way. Uh, they don't. They do not want to commit themselves strongly to the upside or downside.
Oh, okay. So in other words, they're kind of just hedging in the middle.
Yeah, or I think they're now happy with some little appetizers or some little premium instead of going for the big wins.
Okay. So this is what they're doing while they're waiting for a trend to start, a
And
significant
then
trend to start in either direction.
Yeah, I mean, I think that's also exactly what you are doing now.
It is exactly what I'm doing right now.
A lot of cash and
Yeah,
doing a lot so
I am
far.
cash heavy, but right now, but still, hey, it's one of those things. So, hey, well, thank you, Michael. That's awesome. I'm going to get on to the next slide. We're going to jump into the charts and take a look at that. As of 9 o'clock this morning, the Dow, here's compared this week, and this is year to date numbers. The return on the Dow is about negative 8%. One of the things that I also took a look at is from the high of the year on the Dow and the high of the year on the S&P, NASDAQ, and Russell. The actual, especially on the S&P, because that's what we pay a lot of attention to, from the high of the year to where it's currently sitting, it's actually down somewhere around 10%. And so a couple of things that are interesting about that is, one is in the past 3.5 years or so, the S&P would drop, and let's say do a really quick little 7 to 10 to 12% correction, but it wouldn't stay there, and it would bounce back up. The difference this time is it's more or less staying there. It's as if it is, as we said earlier, it's consolidating its losses, and the character, the personality of the markets have changed. And so, just bouncing down here's where we were last week, and the market is, in fact, down a little bit more than what it was last week. Okay. Oh, that was a surprise slide, but I really sense that the path of least resistance is down right now. And let's take a look at some charts. The S&P daily on the left, weekly on the right. A couple of things you can take a look at is that, one, we are in a defined downtrend. We've dropped off. We can draw in a trend line now from this high to the high of the swing, this swing high here. As we can see, the stocks in the S&P were the S&P itself was basically marching up, obeying this little trend line, but then it broke down from that on Tuesday of this week, and it looked like yesterday that we were going to basically hammer right back down towards the previous swing low from August 24th. Let's throw a fib retracement on this for this most recent move to see what we're looking at. And as you can see, is yesterday it dropped to 61.8, but we didn't close below the 61.8. It actually closed back up into the magic fib box between the 38 and the 61. And where are we at today? We get a gap up to start today. We're hitting our head against the 8-day moving average on a daily chart, and it looks as if that which also corresponds with these low-lying levels of resistance that were support, and so it's right up against a level of support, support/resistance, and its progress has slowed down. And so what do we got on the weekly chart? Basically, the thing that it really is attracting me, yes, we get a little bit of an uptrend here as the price is kind of hammering, is jumping around in this area. But what we've got on a weekly chart also, but it's staying down low. Same thing over here on the true strength indicator. So there's nothing that's showing strength is moving back into the market. However, what we do see is, get rid of this, is that basically we have a very well-defined range now from the high of last week to the low of this week. And so price could machinate in this area here, going sideways until it does in fact determine a direction. The other thing to notice on the weekly chart is this 8-period moving average is working as a strong level of resistance. When prices approach it, it falls down, or when it broaches it as it did last week and falls back through it. And so I'm going to be utilizing that 8 this in this case is an 8-week moving average, to dictate, the type of trades I want to get into. In other words, if it gets back up to the 8 and then stalls and falls, I'll be looking at, taking a negative position in the S&P. And you can also utilize this same technique with, individual stocks. And as you can see right now, and bopping back over here to the daily chart, is right now the 8-day moving average is working as also a level of resistance. So let's take a look at the NASDAQ. Okay, NASDAQ hold on a second. The NASDAQ was holding up very strongly, or more strongly than the other, and it looked as if this what could have been a bull flag was broken to the upside, but look what happens. The price action today pushes up, gaps up, right into resistance. And if we close back below the 8 and even drop back below this 42.85 level, then we're probably going to go back and retest at the 38.2. If we violate the 38.2, that puts us in the middle of the fib box, and then that will potentially set up a new trading range for us with the NDX. Of course, the NDX is index ETF are the QQQs, and if the NASDAQ kind of gives up the ghost and gets tired of holding up the two weaker indices, which oftentimes happens, it has a much larger potential plunge than either of the two indices. What do we have going on a weekly chart? Yep, the momentum is coming up a little bit more. However, the true strength indicator is still hanging down here in the downtrend zone. And we're getting a shooting star from last week, basically a shooting star type pattern on a weekly basis, being followed as of right now with a bearish engulfing pattern, where is it happening at? Right at the 8-week moving average. And again, that 8-week moving average, especially for the longer term traders, knowing where that is can be very important, because it can help you plan trades around, like in the case of the NDX, to plan trades around where you'd want to potentially buy some puts for more downside. And so it's because it tells us basically that if I bought puts here, where am I going to stop out at? Well, I'd stop out price action above the 43.72 level. And so it makes a very objective point on the chart to plan your trades around. So that's a good thing. Let's take a look at the Russell. The Russell was okay. Russell's looking weaker than the other two indices as we speak right now, because you remember the S&P, we actually got up to the 8-day moving average. However, with the Russell, it did not quite make it up there. We've had 1, 2, 3, 4, 5, and what appears to be 6 days down. Actually, yeah, 6 days down out of the last 5. And yesterday's hammer, which appeared on both the Russell and the S&P, yes, that is a bullish reversal signal. However, where did it go today? It went up into the proximity of resistance formed by the moving averages, and also resistance formed by these other lows where it come down and tested previously. If we lay on the fib on this one, what are we looking at? We should be just about back down to the, actually we're a little bit below it. Here's the 62.8, and we actually have broken right back down through that. If we get a close below that, the 62.8, it increases the probability that the Russell will revisit or complete a 100% retracement of this up move here. And so we'll be standing by to see what takes place with that. Again, on a weekly basis, on a weekly chart, look what's happened. The same. We know we're in a downtrend. We've had the 8-week cross the 20-week, and the 8-week cross the 40-week. The 40-week moving average, that's this dotted red line, which is equivalent to the 200-day moving average. So we've had a death cross in the market, or in the Russell in this case. And so this line, this 8-week moving average, is acting as resistance. Just as, it started to act as support over here, it would fall below it, but then look how well the 8-week supported this move on the Russell from the beginning of 2015 on up until it closed below it. And so interesting indicators of what's going on in the market. What would be kind of fun is if the price action, let me get rid of that, go back and get my, here's something to keep your eye out for. Let's say we do get a return all the way down to this level here. Well, if at that time we have a positive divergence on the true strength indicator, or maybe a little bit of positive action on the momentum by the time it gets back down in the area, that would be one of our indicators saying, aha, that's a potential reversal signal for a rebound. And from a calendar standpoint, since around the middle of October, oftentimes the markets will rebound and go into their the first phase of their Santa Claus rally. Who knows? The timing may work out perfectly for that. What could happen here is that we could actually fall below it. But if you're still getting these positive divergences, especially on the weekly charts, that could be indicative of, we're going to get a better bounce, and it would bounce from a lower level, but the market would have put in a new low. However, our indicators would be not putting in a new low, therefore providing us some clues that, hey, we may be moving the other direction at some point. And so, pretty good picture there. So, any questions on the markets, guys? Okay, Michael, you got any comments?
Not really. I'm just thinking about it, but
okay. But it is kind of interesting how this 8-week moving average has, ever since the Russell moved over, this 8-week has provided just excellent, levels of resistance, and so that's what I'm saying. One could trade, plan trades around those areas, and that forces us to be patient and wait for price action to get up into that area.
Yeah, I think what has been astonishing, what is really exceptional, to my mind, I'd say all these corrections are still technical corrections. I would not say, well, it's because suddenly the China stock market crashed.
Yeah, no, without a doubt. And a matter of fact, on Wednesday,
so I'm a little bit waiting or worried that we have a binary event this year.
Okay, when you say binary event, what does binary event mean?
Yeah, meaning the Fed says something very surprisingly, or
you mean kind of like a black swan event?
Yeah.
Okay, excellent. So it's always good to keep an idea of where a 20% retracement would be. And you can see on the Russell, approximately 20% retracement, which would then throw the the personality of the market into a bear, what would be termed a bear market. but it would definitely be a negative sign. And as of right now, from that high of the year, we're down about 12%. Yeah, about 12% on the Russell from the high of the year. So, as I said, in some of the past, like here was the big one from last October. How much did we correct there? Well, we corrected about 12%. But look at, we got an immediate rebound and things took off. And that's the way the price action and the personality and the character of the market had been for approximately the last 3.5 years. And as we can look over here, after we took care of this rounded top, different personality. We got this huge rebound on what could be considered the mini flash crash. But this time it is different, not in a positive way. So just something to keep your eye on. And so let's see. David says, great discussion. I had to step away for a while. Okay. Big event that pushes us to the downside. All the computer guys from the Silicon Valley here, Michael, are helping me out with your computer talk. Being a binary event and all that kind of stuff. Is that computerese?
I don't know. I grabbed up this item and I just like it. So.
Well, because I know you kind of have had your training in computer science and because you're kind of a computer engineer, right?
Yeah.
Yeah. See, I'm just a civil engineer, so I deal in things that are much more concrete. Anyway.
That's more fun.
Anyway, so let's take a look. Path of least resistance. Remember that no market, either up nor down, goes either straight up or straight down. And you'll get these little zigs and zags. And so if we were to kind of measuring, where we were on the Russell chart, I would say we're probably about, we may be experiencing this. Like we're somewhere in here. And I was going to say, things go up, they go down, and but nothing goes up and or down in a straight line. So what else we got going here? It's been a really nice week this week. Got a couple of really good trades. We bumped up from last week about $2,000. And I think that what we'll see going forward, folks, is with the readjustment that Mike Traeger and I worked on earlier on the week, you will see some additional trades coming out in addition to Strategy 3. And so what we do at Active Trend Traders, we basically do try to clarify, simplify, multiply. We focus on, what to trade, top quality IBD stocks, and our index ETFs. And focus on when to enter, when to exit, what strategy we're using, and we communicate that to our members. We have 3 separate strategies that attach to or built on top of the active trend trading system: the stocks and index ETFs, basic options, and that's what we had going on this week. We had basically what we tried to do, a short on AMBA this week. But nothing was, we couldn't borrow against AMBA, and so we turned it into a basic option put trade. And then, of course, holding leaps in various entities and selling premium against those leaps. So here's an IWM example of that strategy where, and at the beginning, on 4:30, I bought the January 2016 123 calls on IWM at $7.60. And I want to remember that this trade is scalable. I only did one contract just to do it as a tracking situation. And as of today, we have just about paid off the $7.60. As you can see here, out of that, we've collected enough premium that our cost basis on this particular option, this what was a leap option, is now turned into just a regular option. My cost basis now is about 63 cents. We're generating about 31.32 in cash flow on a weekly basis. There's 16 weeks left until the expiration. So I have about another $501, somewhere between $450 and $501 to collect. We've been averaging 4.27 collected per week against that $7.60. Our target on this particular trade is an overall 50% return, and if I hit this number, we will have achieved that because I have $760 invested, and so we're generating about $128 per month. And this is a scalable trade, but at the same time, if you're interested in this kind of trade, you're not going to take your whole, all your trading capital and put it into this kind of trade. But 10%, 15, 20%, something that you're good with. So this week, what do? We had no strategy one trades. We closed out the AMBA October 70 puts for a gain of 560. Then we had 509 in gains from the Wealth Index Strategy 3 that I just went over, and we're still waiting for a alert on the early warning alerts. Next month, I'll be doing a couple of presentations, and maybe three. One may be in Hawaii, but these two are on the calendar for the TOPS, which is Trading Options for Profit Group in San Jose. I'll be talking about generating income with weekly options, and then the technical analyst group that hangs out at the Golden Gate University as part of their master's program there. I will be talking about patterns for profits on the 24th. So if you are listening to this and tune in to the webinar via our YouTube channel, you can get a special discounted rate for your membership. So I want to remind everybody, please, I look forward to seeing you next week. Trade profitably, trade wisely. Michael, thank you for joining us again. You are a welcome addition to the group. I love getting the the additional information that you bring to the table, which is very valuable about how things are being seen in in the European market. And so, Malin, can I answer a question? Just go ahead and type it in and we can answer it. David says that he's been very successful during the month of August and September with SPX bear call spreads. Yeah, I can imagine you have been. And I bet you could almost be a little bit risky with them too and do them at or in the money, yeah? Let's see. And so, okay. Well, with that being said, that's going to conclude our presentation. Now, I would love to look at some stocks with everybody. Out of many but volatile caused me to roll out one of them. Okay.
Actually, if I...
Yeah, go ahead, Mike.
I can just start.
Oh, you want to? Oh, you're going to... What?
I thought there, I think the only... that there are some stocks that were solely picked out as trend stocks.
Okay.
And I'm still surprised how well they're doing. That's especially Starbucks and the airlines like JetBlue Airways.
Yeah.
And the Norwegian Cruise Line holdings. That's also one of.
I'm not a big fan of Bucks because just for so many reasons. But anyway, yeah, what's Bucks doing? Yeah, you're absolutely right. I mean, it did the flash crash and then came up and started to move up. And it's, it's not a real fast mover. But if one was to have taken this move where it broke, on its close above the 8-day moving average, its return over the last few days has been... or even this close, because we were very positive. But anyway, it's about the same. So our your return up, over the last, 15 calendar days is about 7%. Not too bad. Yeah, so, but yeah, Bucks is really holding on. One of the things that I'm seeing here with Bucks though is it running out of gas
Yeah.
or running out of caffeine or something? I don't know. You've got some negative divergence going on here, and we are operating right at a it's really close to a top resistance area. And so, but right now it's looking positive. What were some of those other ones that you?
Well, the JetBlue and or maybe because they we can.
Yeah, hold on a second. Let me get my watch list up that has JetBlue on it, and it's in my secondary list. There it is, JetBlue. Yeah, JetBlue really held up very well. And I mean, it really made a really positive move. And once it got back up above the 8-day moving average, it just basically respected the heck out of that line. And from this point here, where it closed above, if a person would have entered a trade there, never closed back below. Well, the high was up at 16%, and we still actually haven't closed below the 8. So if a person was using the 8 as their trigger, you'd still be in that trade. And it's up about 13% over the same period of time. Here's one that I really, really like, and I'm going to get to folks' chart stocks in just a little bit. This one has been behaving very well. One of the reasons I like cyber is, it may be going into a pullback here shortly, but it basically has done a huge correction, lost almost half of its value, starting to work back up on the other side of what could be a just significant large size cup. We've hit some lows here. It's bouncing back up. It has note here though that it has not closed and retaken its 8-week moving average, although we are getting some really nice bounces off of the 8-day moving average. Very positive. The 8's about to cross the 20. And from the 20-day moving average here up to this moving average envelope is a 10% move, and this is doing a move that is very reminiscent to stocks when they are coming out of a bottom. They come up and they hit their head against old resistance, which this one is doing. But look at the volume, good buying volume, hit against resistance, then pull back in order to regain strength to pop back above that resistance. And so a stock definitely to keep our eye on. So that's one. And then another one that was really surprising this week, Michael, this one was Netflix.
Yeah.
It busted above this trend line on some good buying power yesterday off of this uptrending line. And so let's see what happens. I mean, because if we get where we do get a close back above the 8-week, it may go into another huge move. And this would be just a little gentle pullback. Momentum has turned back around on all the charts. So definitely want to keep your eye on. Okay, and Michael, if you have any other stocks, you can just throw them out there and I'll.
Well, just for fun, maybe the NCLH.
NCLH. That is a question by Susan, so we'll be covering that shortly. So let's see. Let's take a look at this. This is Seagate Technology. Seagate Technology is in a downtrend, and at this particular point is not looking like it is ready to turn back around. Let's take this as a weekly chart. I know this goes back more than this. Where is it at? Okay, it failed. It's making a new low. And at this point, I'd be looking at Seagate for, to be short the trade, but it would have to be bouncing up against the 8 or the 20-week moving average. And over here, it just doesn't look like we've had a capitulation to the downside yet. And so Seagate, you can go back to the weekly chart. Looks like it's got some good support down there about 38, maybe a little bit here at about 41.50. But it looks like it's in gear to the downside, Evelyn. And if you own this stock and you have lots of it, that may be something you would want to sell calls on. Ford Motor Company. Ford also is in a downtrend. Here's a big down day. The daily charts are looking weak. It's below the 50. It's below the 8. And so it is in a downtrend. Is it going to also capitulate back down to the downside? We will see at this particular point. But this week, and this is one of the reasons why it's so important to look at a stock both on a daily, but then look at a longer time frame, because on a daily chart you probably wouldn't have seen that, which showed where did it go? It went right to a level of support and bounced. And so if this is going to take Ford back into an uptrend, that was a level, it wasn't just a magic bounce, in midair. It bounced there for a reason, because somebody was buying over here and somebody was probably programmed to be buying again. GM very similar. Again, take a look over here. It came down to a level of support, but it too is in a downtrend. Of course, this was a big capitulation move down, but as you can see, GM, Ford, nowhere near as strong as other potential growth stocks, like some of the ones that Michael pointed out and I pointed out earlier, that have, I think, a bigger potential to move. But I know that a lot of people do own Ford and also own GM. And so they're great little...
Kramer suggested that this is a trade that German cars lose, but people still like to buy cars, so they buy American ones or Toyota.
Yeah. And so, well, okay. I'm not going to talk about the U.S. auto manufacturers. I'm sorry. I'm not going to fall for that, Michael. Anyway, what do we got with Norwegian Cruise Line? Okay. Well, we're at a level of resistance, a zone of resistance, if you will. We're getting some back and forth. Let me put the volume on here on the weekly chart to give us a little bit of extra info. Okay. Okay. Okay, selling volume here. This was on at the beginning of the month. This must have been, it was earnings related. We get a nice sell-off, the flash crash, but it's come back very, very nicely. At this particular time, it's trying to decide which way it's going to go. But you got one pullback with extra volume. The buying volume has been okay, but then it's been almost offset with the selling volume is what I'm seeing right now. If you're long the stock back here, from maybe you picked it up on this breakout here at a 58 or so, well, you can stay long the stock until you potentially get a close back below the 8 or below the 20. But don't let your profits, if the market does, turn uglier. And Norwegian Cruise Line, may fall out of bed. If the weekly candle finishes as it is, we'll actually have two what you would consider bearish signals in a row: a shooting star and a quasi-hanging man type of weekly chart or weekly hammer, and both of those are reflective of that, of negative expectations. They're negative reversal signals that would tell that we wanted to go down rather than up. And the other thing that we've got going on here, you've got the momentum coming out on both of those. And so it may hammer its way up around. It can in fact go higher and still with a negative divergence, but if it does move higher, I would be looking for right now an exhaustion move or a capitulation to the upside before turning over. That's what I'm seeing in the charts right now.
Yeah, it makes sense. Yeah.
And it's because it's had almost 100% move from down here.
Yeah.
And so that's during some really challenging market times. It's moved, when it's from its breakout here, it got up, where did that go? There we go, 80%. And even this year, when it went back above the 8 here, if somebody went along, a 40%, stock for the year, which for 2015, that's pretty darn good. So, okay, PAYC. Keep an eye on the clock. And so PAYC, I'm liking this more and more to the downside, simply because one, it's broken down, but it's starting to rush through and slice through some of these longer-term moving averages. Right now, on a daily basis, it's sitting below the 100. Now it may move all the way down to this level here, which would be actually a 100% retracement of this move. And what do we have going on up here? We've got the 8-week turning over. It's closing below the 8-week. And so, you can keep your eye on this one for a potential retest back in the middle of this candle, about 36.40, which would be just below this level. But as you can see, selling is coming into this stock, and this is a really good instructive chart, because while it was macinating around in here, look what the momentum was doing. It was basically doing a similar type thing, and this is often an indicator of either one or two things: indecision and or latent weakness. And the True Strength Indicator was doing something very similar, made its little spike up, but this was very telling. Huge spike up on increased volume, and then the next day it gaps down on huge selling volume. So that was kind of a precursor. Now we've broken the 50, broken the 100, and so this may be one, if these moving averages continue to turn, is when it bounces back up against the 8, that would be a potential to get short the stock. If you're long the stock, I hope you will, Tracy, I hope you would have pulled out some of your profit up here. But I'm looking at this going negative now. It's got a huge range. Notice the formation here. It's like, it looks a little bit like a rounding top. And the last 2 weeks, big selling volume, big selling volume. So on that note, Michael, I'm going to call it a day. And folks, I encourage all the Active Trend Trading members to join us on Wednesday night or catch the recording. I think you're really going to enjoy and like what you see as we take off some of the filters and get back to the more stringent following of the 8-day and 8-period moving average.